Hey, good afternoon, everybody. We'll get started here just in a minute with a quick Q&A. So if you guys had an opportunity to hang out with me last Wednesday, we had an amazing webinar and we'll continue that webinar tonight, 7 p.m. Central. So I hope to see you there. It's free. All right. And you get to learn a little bit about me and the trending methodology using supply and demand to kind of help you identify those big turns in the market where institutions are, market makers, basically the bigger players, right? We're retail traders. And what I'm trying to do is line you up on the right side of the trade, help you to figure out what a repeatable and consistent trading process looks like. And so we'll kind of go through that. And so if you guys were able to catch me last Wednesday and you have some follow on questions, you're more than welcome to ask here inside this room. And that goes for all of our members over in the trendy room as well. And we'll get started here in about 20 seconds. All right, so let's go ahead and get started. So again, guys, welcome back. It is the 7th of June. It's Wednesday. And again, I have a list of questions that came across that are, I think, awesome questions. And they are questions that I want to be able to answer for you guys. But we'll kind of leave it at that and kind of start from there. So one of the first questions that I received was, how do you determine when to enter or exit a trade using your system? And what I'll tell you is that zone trading itself, okay? Zone trading, identifying supply and demand zones. I'm going to give you like a quick intro, right? Because Saturday, we actually have a class where we're spending 4 hours deep diving into my methodology. And I promise you, you wouldn't want to miss it. So, this goes for our veteran traders as well as anybody that might be new into supply and demand trading as well. So, typically, what you'll see is we are going to have two zones on our chart. We're going to have a green zone that identifies demand, and we have a red zone that identifies supply. And the idea here is that when price pulls back down into a demand zone, that we stay really patient as price gets here. We have two different approaches into this. We have what's called aggressive, and then we have a conservative approach. And there's a couple ways to do this. Aggressive would be understanding that the risk pertains to this top line and this bottom line. In this example, let's just say that it's $1, right? So your risk is going to be $1, whether you're trading equity or whether you're trading options. And this could also be an ES futures chart, NASDAQ, oil, it doesn't matter. The demand zone itself is identifying that risk. All right. So the entry itself comes in a few different ways. Conservative approach would be saying, okay, I want to wait for a couple different signals before I get long. One of my favorites is just waiting for a reclaim. That lets me know that the zone is working, and then my entry would be right here. The other way is looking at the histogram on the TTM Squeeze Pro. And what I'm looking for is for price to drop into this. And down here on your histogram, you'll see these red bars. Okay. And then as buying and selling pressure, right? You get different colors. The selling pressure is going to show red. And then as soon as that starts to weaken and you start to see buyers come in, you'll start to see some yellow bars start to appear. We like to look for, 1 to 2 yellow bars, and that gives us the indication that buyers are stepping in. All right. And so when that happens, see, like right down here, notice that we have red bars that are live right now, and we have this cloud. So we want to stay short in this particular trade. And that's what we've been coaching ever since this entry up here. All right. Very, very important to understand that. So once again, let's go to a whiteboard. So let's just say we're going to put that demand zone up here. Again, aggressive would be like, hey, I'm okay with the 1 point stop or the $1, however you want to look at it. And as soon as it hits this level, I want to go long. And what you're looking at is lining yourself up again with those bigger traders that are out there. All right. And again, conservative would be waiting for a couple tools, looking for some confirmation and so forth. Now, I'll tell you, like, far as, how I feel is I'm more on the aggressive side. Like if I'm okay with the risk, I'm just going to take the trade because I'm already telling myself right away that I am willing to lose this amount. If I'm not willing to lose it, like let's say the risk is actually like a four, $4 or 4 points or whatever. If I'm not willing to lose that, then I'll jump on the more conservative side. Okay. I hope that helps. And now, as far as exiting trades, wow, this one's amazing because we use this indicator right here, which is the EMA cloud. I'm just going to open that up. And again, I've been, you know, coaching all morning. All right. And so I want to show you what's going on here is that as far as like exiting, like say you got short, and we'll go over this here in a second on the PMZ trade. So we got traders that went short today, including myself. The idea, whether this is going up or down, you're using the EMA tool to help you stay in that trade. So when we talk about exiting, I don't really want to get out of a short unless price can build above here. Okay, that lets me know that finally, you'll most likely notice down here, you'll start to see like yellow bars and so forth. And then this will let me know that we finally punched through that resistance. And what's happening today, and I told traders, like, don't be the trader that keeps trying to buy the bottom. And then when you go back at the end of the day, go, man, it was right there in front of my face the entire day. I should have just been shorting the cloud. You see what I'm saying? So we look to stay short there. Okay. Yes, I'm doing really well. I would like to know about your day trading time frame and how would you trade with a $10,000 account and your risk management. So a $10,000 account for me, it's been a long time since I had $10,000. What I want to go back and say is that we always get the question of how big does my account need to be? And I mean, we've had traders in here that just have a couple $100s to a couple $1 million. All right. The process itself is all about it's the same. And that's why we concentrate on our process. All right. The idea is that you can use any size account when coming in here with supply and demand. Okay. Now I am not, and I will tell you, when I first started trading, I had this like thing in my head where I was like, okay, I got to use percentages, right? I don't want to lose more than 2% in a trade. I don't want to lose more than 5% in a trade. So whether you have $10,000 or you have $1 million or you have 500 bucks, this is what I'll say to you. The first thing to answer that question is no matter what trade you take, are you comfortable with your risk? Matter of fact, it's one of my first things that I ask traders is what is your number? And I always get like, well, John, what do you mean? Like, what is my number? What is your number? What is the number that you are willing to lose? Because there's one certain thing in trading, you're going to lose money. Okay. That is a given. So when it comes time for you to lose that money, are you going to freak out? Or can you be at a Zen state and say, okay, that's what I'm okay with losing? So to answer your question, for me, it's a little bit more complex than just giving you a number. For me, that doesn't like necessarily make sense. It's more about what are you willing to risk? The trade is the trade. That is not going to change. We have automated levels that we trade off of. We have zones that we trade off of. The structure, the process is there. The question is before you take the trade, did I line you up to understand what your risk is? For example, this ES trade we've been saying is short almost the whole entire afternoon here. All right. And every time it comes to a level, you could try a bracket trade here. Our risk today is only 1.5 points. So 1.5, I'd say up to 2 points of risk. Okay. So every time we go to take that trade, do you know how much money you could lose? So for example, if I go long here at my automated level and daily demand, okay, and I put a 2 point stop, then I know immediately if I do that in the futures, that's $100 a contract. I could lose $100. So the question is, regardless of how big your account is, what is your number that you're willing to trade with? All right. And that's from an intraday perspective. And then at night, we know that if we go into a swing trade, no matter what happens, you have to sleep with that risk. Okay. You can wake up in the morning and you put 500 bucks in a trade and 400 of it's gone. Did you tell yourself that you're okay with $500? Okay. Let's see, how do you identify the key supply and demand levels for a particular trading day? How do you identify the key supply and demand levels for a particular trading day? Well, there's two different ways. So, the one thing that we concentrate immediately is going to be the structure of candles. Okay. So, we're always going to identify, I'm going to teach you the manual way first. Okay. So it's important for you to understand what that structure looks like. And matter of fact, folks, if you look out on my YouTube page, I have these awesome explanations how you find that structure. And so that's how we identify those. So, for example, let me just show you really quick. If we come over here and we come into, let's go to the 4 hour chart. All right. So what I'm always doing is I'm looking down into the left for structure and I'm looking up into the left. Okay. So down into the left, up into the left, if I see structure. Right here, we can see that we have what's called an inside and down formation. Again, I don't want to put too much emphasis on this because I only have so much time with you guys, but also my automated level is already there to identify that. So what I know is that this is resistance until proven otherwise. And when I look down into the left on smaller time frames, I'd find an inside and up formation there, but I also already have my automated levels here. So I understand that buyers are looking to come in around this level. And then I'm also understanding that traders who are looking to go short or to, play like a quick intraday to the downside would be sitting around this area. All right. So again, it's just really all comes in to about structure. Let's see, what led you to develop your own indicators instead of relying on more commonly used ones? So, the big thing for me, folks, is, and I talk about this in the webinar, I feel like if you're using indicators that the majority of traders are using, especially free indicators, then your competition has the opportunity to squash you. Again, I always feel like, retail against retail, but you also have institutions, hedge funds, and so forth. And what they're looking for is, if the masses are all looking at the same thing, like say a head and shoulders or an RSI indicator, and they're like, hey, this RSI that you got for free, everybody's reading the same thing on it. It's really easy to manipulate price action in the market by those bigger funds, right? And so they could easily know that everybody's looking at the same thing. So why wouldn't they try to squash you? You see what I'm saying? So my biggest thing was I want to be different, right? So I want to identify structure by identifying where the bigger players are trading. But then why did I create the indicators is to make it much more convenient. That is the important part. So when I say convenience, guys, my process is probably the most mechanical process that I've ever come across. And I'm not trying to sound, biased or egotistical or anything like that. When I tell you I have a strict process, I mean it. It's really, you could jump out of bed, have a cup of coffee or whatever it is you do in the morning, come straight to the chart, and everything's there. Like this morning, we always start out 30 minutes in advance before the market opens, and we say, hey, look, your daily edges are resistance. This is your daily supply. This down here is your daily demand. Okay. PMZ, right here. We'll talk about that tonight in the webinar. How do we trade this? Really mechanical. We go long above it and we go short below it. It tells us our risk in advance. Hey, we went short under here. John, what do I do? Stay in the short until we can build value above the cloud. Folks, as I sit here and talk to you, right? Boom. We hit the cloud. We're right back down. There's no reason to try and fight this trend. Okay, so that's what we're doing right here. It's all about, it's all about, I don't like saying the word lazy, but it's about convenience. But one thing that I always like to say, folks, is that you need to find out how to identify this stuff the manual way. And then you come in and then you can really, really appreciate how convenient it can be to find these levels. Well, how well do the levels work? What are the levels all about? Well, what I've done is able to come over here and I've created, when we double tap on this watch list, this is really cool, folks, because a lot of people use scanners, right? They'll go to the scanner machine, right, and try to scan something. Well, inside my watch list, it's already identifying supply and demand zones based on the edges. Okay. And they're for different types of traders. So we have the daily traders who are looking for profits anywhere from a couple minutes to the day. We have weekly supply and demand zones where traders are looking, right, to be in a trade for a couple days to a couple weeks. Then we have these bad boys that are pink. Those are for traders that like to be in for several weeks to a couple months. And then again, this right here is for my leap traders or 6 months to a year or so. Okay. Let's see, Jerry. Please show recent trades using the daily chart for swing trading with explaining your trades. Thank you. Sure. So recent trades would be, well, let me get to that one. Let's save that one for the end. Some of these are a little bit easier to answer real quick. So the indicators, instead of relying on more commonly used ones, again, I think it's more about just being different than your common indicator that everyone's kind of using the same things. Not a lot of people are using supply and demand. As I said this morning, it's getting more popular, and I think that's important. To understand that this system itself, it's been around since the inception of the market. It works really, really well. Basically, what I've done is just refine it and make it a lot easier to understand by me coaching, but also giving you the levels that are, they're very, very solid. Let's see. How has your trading system evolved over time, and what changes or improvements are you currently considering? That's a really good question, um, because I never think I'm finished. In fact, I mean that's life in general, right? Is that you gotta push, man. In this environment, to be a good trader, you cannot stop just because you think that you're doing good. If you guys know what I'm talking about, well, first of all, I know you understand what I'm talking about because the the typical trader will do really, really well for a couple days or even a couple weeks and feel like, hey, I'm on top of the world, man. Right? We saw that explosion over the COVID era, right? Lots of guys and gals jumping on YouTube who had maybe like 6 months in the market, might have taken a cool trade, and then all of a sudden you see services popping up left and right. The question is like, how much have you sat in the chair? So I'm always improving, and I will tell you this, like, what are the changes that I've made? Several changes. The levels have always stayed the same. The only difference is how we execute the trade. And we've just, like, over the last year, really put a lot of focus on the TTM squeeze and understanding when we get to our key levels, are we actually seeing that buyers are stepping in? And this is such an amazing tool to introduce to my system. Now, far as like what I have in store, I can't go into that, but I can tell you it has a lot to do with this guy right here, and it has a lot to do with supply and demand. All right. Other things would be the scanners. Just like if I double click here, right? This lets me know immediately that I have a setup into my PMZ, and like I said a little bit earlier, we'll be going into that a little bit later tonight. Okay, so again, that's my PMZ scanner. This is one of our favorite trades by our traders here, especially in the futures section of trading futures. So again, that would fall into this category. Yeah, can I show an example of a trade where your system worked extremely well and one where it didn't? Yeah, 100%. So here we go. So we took Tesla and actually just closed this today. So this kind of helps too, Jerry, with one of your questions. All right, so here's Tesla. Once it loads. All right, we'll take these Fibonacci's off there. And let's go to a little bit higher time frame. All right, so this kind of answers your question too, Jerry. So on a positive side, the indicators let me know, hey, we have a buy, signal here. So I want to be long. We sold this morning. I think this trade, you'd have to correct me if I'm wrong, is around 70 or 80% to the upside. I think we sold for $5 or something like that. And then actually, I can use this as the same thing as a negative. I rolled into the trade for weekly options, and currently those are down at the moment. So we couldn't hold this level, but it's not a breakdown of my system at all. Matter of fact, it's just pulling back into our support right now. You can see the EMA cloud. It's just a matter of staying patient. So this is one that worked out really, really well in the morning, not so well in the afternoon. Another trade that I took, let's go over here. This one's down $11. Okay. But what's awesome about any trade that I take is me putting a lot of emphasis on coaching the idea of understanding what your risk is before you take the trade. So even when I lose, and this is the really important part, even when I lose in a trade, I've already lost before I took it because I accept my risk. And that I'm telling you right now, and I talk about this in the webinar, that is the secret sauce of trading because the levels are great. Okay. The levels are great. But if you're not ready for your risk appetite, it is going to kick you in the butt. All right. So, what do I do when I lose a trade? I just go and I say, all right, it's a loss. It's more about a mechanical approach. It's more about taking the trades because you have the setup, and if it doesn't work out, you go back. And here's a great example. So SNOW, buy signals, stayed above the cloud. Everything looks amazing. It gets to, okay, here's a good one, Jerry. It gets to what is considered a supply zone. Okay. So see this level and this level. All right. This is where you'd want to buy if we get a pullback. And this is where you want to sell. Well, yesterday we started to bid above the supply zone. Okay. Right here. And so I was like, you know what? I want to take the trade to the upside. My target was 189. And this is where we ended up today. I think that's a great example. All right. So sometimes they don't work out. And basically what happened was the supply zone, depending on how you look at it here, after the market, closed, it basically came back into supply and then ended up breaking down. Yep. And we have a lot, how do you get the supply and demand zones on your chart? So the supply and demand zones on my chart are, again, they're automated. So they're indicators that show up. And again, they're all different time frames. So it is whether or not it resonates to you as a trader. Do you want to trade the daily or weekly? Or do you want to trade from this perspective for a longer time frame trade? Okay. And then, of course, what I showed you earlier is how you identify those supply and demand levels. Okay. What does IAD and IAU mean? So, IAD is inside and down, and IAU is inside and up. And that is a reference that I use to identify structure. And to kind of show you what that looks like, I'll take you to a whiteboard really quick. And again, you can watch my video on YouTube to make this a little bit easier for you. This is the initial candle. This is what we call a body. It doesn't matter if it has wicks on either end, as long as the candle here closes inside that body, folks, not inside the wicks, only inside the body. And once this reference point gets broken, it is a inside and up formation, and the opposite is on this end. Doesn't matter if there's wicks, as long as the body, the next body candle closes inside. And then if it goes down through the threshold, boom, it's inside and down. Again, you can watch that video on my Twitter page. Okay. And that is going to sum it up for the day. All right, folks. So if you have any other questions, then I cannot wait to see you tonight at 7 o'clock. Again, it's free, and we have an amazing lineup for you. And we have a crazy promotional deal that we already know about. And many of you have joined us. And I just want to say thank you again for being here. I really appreciate you. I appreciate your support, and I look forward to trading with you.